All right, thank you, Maureen, and thank you for hosting me today, and thank you to everyone else who has chosen to take time out of their day and participate and listen to what I have to say. Appreciate the opportunity to be here. So let's just dive right in and talk about this offering that we have and the problem. What am I here to talk to you about today? We're calling this presentation Reclaim Your Business Number. And the reason for that is that there's a problem that all businesses face. And that problem is consumers don't answer the phone as often as they used to. There's a lot of reasons for this, but based on our survey information and the research that we've done, we know that 87% of people don't answer phone calls from numbers that they don't recognize. And most often when large enterprises or businesses are calling consumers, those consumers don't recognize the phone number. This has led us to create a solution that holistically we refer to as call enhancement. And I'm going to hang out on this slide for a minute. If there's one visual that I'd like everyone to take away today, it's this screen here. When I talk about 87% of people not answering the phone, the reason for that is really the representation that's on the left here. You get a phone call from a number that you don't recognize, and that phone number itself doesn't mean a whole lot. You might see a city state, and that city state might or might not be relevant to you personally. We have trained ourselves not to answer these types of calls due to the increase and onslaught of illegitimate and harassing robocalls, as well as scammers and spammers. We don't trust the phone like we used to. And so in our call enhancement suite, we've got two offerings. One of those is Inform, and the other is Engage. I'm going to first talk a little bit about Inform. You can see here that instead of a phone number, we've created a fictitious company called Goodsurance. And this is a name instead of a phone number that's getting pushed through as a part of the phone call process. Now, a lot of times this can get easily confused with caller ID, but there's a metric I'd like everybody to realize. In the world of mobile phones, and let's be honest, we're calling mostly mobile phones these days, less than 5% of the mobile phone population is subscribed to any type of a caller ID offering. So what that really means is about 5% of the time, the phone calls that you, the enterprise, are making to your customers are unrecognizable. With our Inform offering, we're able to control the name display programmatically for nearly 100 million devices in North America. That's a big number, and it works 100% of the time. That is a programmatically controlled name that is something the enterprise has full control of through our portal or through a set of APIs. Not going to dive into the technical nature of all of that, but it is something that you can control as a part of the calling process. And then we also have Engage. Now, this is generally what people are most excited about because you, the enterprise, are in full control of the content that gets delivered as a part of the phone call process. I'm going to hang out on this image for just a second on the right here. You can see again, we've represented our fictitious company, Goodsurance. Below that, you've got some custom text that you can control. In this case, you're not only identifying yourself as the enterprise, but with that subtext, you have the opportunity to further communicate the intent of the phone call. In this case, it's Goodsurance calling about your policy. They have the ability to control the image. That's the full screen image there, which includes the Goodsurance logo. And we've seen a dramatic improvement in, generally speaking, business results across all industries and use cases. In this case, we're talking obviously about insurance. So I want to talk about a couple of things just holistically here about both inform and engage. We know that there's an impact to answer rates and ultimately conversion, and that conversion could be defined as sales or customer experience or customer resolution. But there's some other things that go hand in hand with this service. We found that more people answer the phone, and when they answer the phone, they're more prepared to have the conversation with the enterprise that's calling them. We're delivering a certain level of trust and confidence back to the phone call. And that's a big deal. We've seen some impact to metrics around large volume outbound calls. Things like average handle time start to decrease. And that's a metric that a lot of people pay attention to. Other metrics like first call resolution. So this customer filled out a form and wants to talk about a policy. Well, when you call them, they know it's you, they answer the phone and they go, "Thank you so much for calling me." It's a better customer experience end to end. So moving on, I've talked a little bit about answer rates already, but that is one metric that we can measure. I know that there are other business results that don't necessarily rely entirely on answer rates. In some cases, you want to increase conversion, but not necessarily answer rates, meaning you want the people that want to talk to you to answer the phone, and those that don't want to talk to you not answer the phone in some cases. So again, a couple more examples of inform and engage here. You can see that this even works on the Apple Watch when it's inform. And then on engage, you'll see that little bubble there in the top right. In a lot of instances, we've seen a very dramatic increase in answer rates. And answer rates obviously drive other business results because you're having more conversations. But in some cases, we've seen an increase of over 200%. Now, go back to what I said earlier. 87% of people said they don't answer the phone when you call because they don't know it's you. In this case, we're communicating who is calling, and again, in some cases, why the call is happening. More people answer the phone, and there's a better experience for both the individual making the call and the individual receiving the call. So because this is an insurance audience, and we have some clients today in the insurance space, I want to talk about a couple of case studies that we've done and results that we've seen. Everyone on this call cares about issues related to a lapsed or canceled policy. For a very specific use case around lapsed policy notifications for customers, where they're trying to reacquire or notify the customer of a missed payment of some kind, we saw answer rates increase from 9% to 24%, and close rates increase 70%. Think about what that means to your business today. The results are staggering. Again, going down to the customer upsell case study. In this instance, this is an existing customer of the insurance provider. They are trying to offer them additional coverage or a new policy of some kind. We saw answer rates increase from 25 to 40% in this particular case study, and close rates increased by 10%. Again, I'll say apply those percentages and metrics to your own business and think about what the impact might be for you. One service I want to hang out on for a minute because it really communicates the issue with phone calls is this one I'm calling the customer service callback. This is not specific to the insurance industry necessarily, but it certainly applies. This particular use case is a scenario where a customer has called into a busy queue, maybe for customer service, maybe to talk to a salesperson about any number of issues. The queue might be backed up. We've all experienced that. And when you call in, and some IVRs give you the option to request a call back from the enterprise so that they're not sitting there on hold for 30 minutes, 40 minutes, whatever the case may be. So this is an expected callback from the enterprise. In this instance, their baseline answer rate prior to turning the service on was 38%. Again, expected callback, 38% answer rate. And typically those callbacks were happening within 60 minutes. The day that this service was enabled for these callbacks, the answer rates increased to 73% and have hovered around that number for nearly a year now. So the point is, this service works. These case studies are based on real data, real world scenarios, and customers that we have today. I'll mention that our longest running customer of this service is an insurance company. They've seen tremendous value across every calling use case they have. And we've learned a lot in working with them about this industry. And so with that, I'll just jump right to the end here and say I'd love to talk more with anyone on this call that wants to know more detail or how they might get started. You can check out our website, firstorion.com. There's a lot of good information on there. You can request that someone call you from our website, or if you'd prefer, you can reach out to me directly. I've made my email address really easy to remember. It's just mr@firstorion.com. I'll either speak with you directly or connect you to a member of our business development team. So with that, Maureen, I'll turn it back over to you and we can open this up for questions.
Awesome, Matt. Thank you so much. So in terms of answer rates, I think you mentioned in our offline discussions that the industry is somewhere between 15 and 25% on average now. So applying your 200% increase in answer rate, what can an insurance company reasonably expect that to boost to?
So great question. With the insurance providers that we're working with today, and this is taking all the use cases that we've seen and bundling them together, we've seen a baseline answer rate prior to the service of somewhere between 15 and 25% answer rate. And that has increased to somewhere between 30 and 50%, again, depending on the use case and the number of calls that are made. Mm. So the metrics that, again, we can measure are answer rates, but the goal here is to get more meaningful conversations with customers. And the more people that answer the phone, the more meaningful conversations you can have.
Right, right. So then you also mentioned a lot about business results. So can we get more specific about the type of yield and correlation on business results with customer resolution? For example, you mentioned, first call resolution, right? Getting things resolved quickly. Are there any deeper metrics you can share on that particular metric, or even average handle times? That was probably something that everybody's ears perked up to.
Yeah, so I'll start with average handle time and provide some more generic metrics around that. I mentioned that when you brand a phone call the way that I'm talking about here, it delivers a certain level of trust and confidence back to the consumer that's receiving the phone call. And what we found is when calls are made using this technology, the first minute to 2 minutes, generally speaking, is just a lot smoother. So I'm definitely not representing that we've seen a 2-minute reduction in average handle time, but we get through the opening part of that conversation much faster because that consumer knows who's calling. Another metric that's not represented in the slides here is we did a very focused study with one of our customers in this space, and the metrics were outstanding to the extent that we did a study on 40,000 phone calls that were enabled with this technology, and those 40,000 phone calls resulted in 5,600 new policies over a very short period of time. And anybody that's listening should get excited by those type of stats.
Yeah, absolutely. I mean, it's something so simple, and honestly, all the phone calls I receive, I've never seen this come up on my screen. And the callback customer service callback one I thought was very interesting, because we've all been in that situation as a customer, right? Where you're waiting for a callback, but you have no idea what number that's going to be. So when they call back, you miss the call, right? So that seems like a really huge impact that you can have on customer satisfaction.
Absolutely. In fact, one of the customers that we're working with on that type of a use case, they have one of their highest net promoter scores they've ever had. And part of the reason for that is customers don't answer those unknown calls, and their perception is, I asked for a callback and they never called me. When the reality is the enterprise actually did call them, the consumer just didn't answer the phone. And so now there's a connection there. Okay, I requested a callback, and now I'm getting a call that's very clearly from that enterprise that I requested the callback from. So that, again, the customer's happier. The enterprise is able to resolve whatever the issue might be more quickly, which results in fewer callbacks that are needed. I'll hit it again, just a better customer experience.
Sure, sure. And I can't help but look at it and also say a great branding opportunity from a marketing perspective, right?
That's right. One of the things that, if you look at the example on the screen now, Good Invest, we actually consider this Inform and Engage offering a part of the omnichannel experience on the customer side. So you as the brand have the ability to brand those phone calls, get your logo, get your name in front of more customers. And that generally does get the marketing team more excited, because the possibilities are endless with this type of technology and the phone call process.
Yeah. So clearly this is new to insurance industry, but you've mentioned there are other segments that are using this more heavily. Can you tell us a little bit about some of those segments and what their experiences have been like? And
I'll talk about one that it's just interesting to me personally. We've got some customers overseas. One of those customers is a very well-known car wash provider, which I know is interesting, but it boils down to a services industry. What happens is this particular enterprise has individuals that go out and wash your car for you at your place of business or at your home. And they saw a really large increase in answer rates when those employees that were showing up to wash the car were calling to say, hey, I'm here to wash your car. So again, answer rates came into play there, and it led to more car washes, faster, better customer experience, better communication. But one thing that happened, that's one of those results that you can't always measure, is some customers stopped answering the phone. And that was actually a good thing, because what would happen is their logo would show up. They would know that they were there to wash their car. And instead of answering the phone, they would lean out the window, unlock the car, and give a thumbs up and say, go to work. I'm in a meeting. I'm busy. And so that customer is happier because they didn't have to talk to anybody. The employee that's providing the service is happier because they can get down to their business that much faster. Just a very interesting use case. The customer service industry has used this a lot. I've already talked a little bit about that one.
Yeah.
Obviously, in the world of finance, there's a lot of issues around fraudulent transactions and transaction approvals. We've seen a lot of good outcomes in that scenario too.
Wow. Well, really impressive. It's simple, it seems, technology, but so impressive on the impact that it could have. So I thank you so much for sharing that with us today, and we'll enjoy the rest of our event. So thanks so much, Matt.
Great. Thank you so much for the time, and thank you to everyone listening. And again, you can contact me at the information on your screen.
Thank you.